Tuesday, September 8th, 2020, Maneco 64, home of alternative economics and contrarian views. So is Boris ready to bail out the banks again? And why do I say that? Well, there's been a lot of stories out in the last few days about the UK going for a no-deal Brexit, Boris Johnson giving the EU a deadline till the middle of October for the negotiations. Two of the main points that are sticking points, one of them is EU state aid and also Northern Ireland. But I think the EU state aid is very important. And why is that? Well, because the state aid rules in the EU prohibit governments helping private companies, right? And that the EU has to be involved in the process. And yes, the UK did bail out the banks in 08, 09 after the financial crisis, but the EU Commission was heavily involved in that. And I might be wrong about this. It's just pure speculation on my part. I don't think anyone knows, unless you are in the cabinet or in the negotiations, exactly what is going on. But looking at the biggest five UK banks, the five biggest UK banks, you look at their stock prices, their charts, we are at lows that we haven't seen since the crisis, or even worse than the lows we saw during the crisis. Look at Standard Chartered PLC, which is not one of the biggest banks, but it's one of the top five, of course. We got NatWest, as you can see here, right on the lows from 09. And I'm going to come to NatWest, back to NatWest in a second. Just look at the charts here. You've got Barclays as well. Barclays is doing a little better, but still not very good price action here. We are near the lows, well, of the last 10 years. You've got Lloyd's Bank as well, as you can see, forming a pretty bad technical picture. And we've got HSBC as well, as you can see, approaching the 08, 09 lows. And the other thing about NatWest, for example, that I noticed a few months ago, I think it was back in end of July, they changed their name. Well, RBS officially changed its name from RBS to NatWest Group. And if you remember well, RBS was the biggest bailout the UK government did in 08 and 09. They put billions and billions of pounds of taxpayer money to buy into that company. Government is still the major shareholder of RBS, but they've changed the name now back in July to NatWest Group. Why do they do that? Well, because they did own NatWest, and at the time I thought, well, they changed their name. Maybe NatWest sounds better. But then I thought, with the way RBS was looking, the price chart, or now NatWest, would they need to bail out this bank again? And it would be much easier to bail out NatWest, right, than to bail out RBS for a second time. Yeah, a lot of people like me remember that NatWest is really RBS, but a lot of the younger people and people that don't follow these topics too closely, well, they'll see, oh, they just bailed out NatWest. They won't realize that they've bailed out RBS for the second time. So how is the EU involved in these bailouts? Well, if you go back to recently, actually, for example, this is from 2017. So 3 years ago. It's not that recent, but compared to when the crisis happened in 08, 09, it's fairly recent to nowadays. It says UK in $1.1 billion deal with EU to settle RBS state aid issues. So as you see, the EU is involved in these bailouts. And I think what the government is trying to do is not be dependent on the EU. And they're concerned, in my opinion, with the situation at the major banks. So that's why I'm thinking that maybe Boris is ready to bail out the banks. Let's just go through this article quickly here. It says the European Commission has accepted, you see, the British government's plan to free RBS from an obligation to sell more than 300 branches, bringing to an end the bank's 7-year struggle to meet conditions for its bailout. So it was a struggle, as you can see, for the government to meet these conditions from the EU. So they don't want to be beholden to the EU if they have to bail out the banks again. That's what I think. And here's another one. This is from 2014, not as recent, but and it's in the FT, this one. It says, European Commission approves new Lloyd's plan for TSB sale. The European Commission has approved a revised plan by Lloyd's Banking Group to float its TSB franchise, paving the way for initial public offering within weeks. So, yeah, I don't think the UK government wants that anymore, and I think that's why they're playing hardball with the EU on the negotiations. I don't think they want to be dictated anymore on EU state rule. Is that just involving Northern Ireland, maybe, and it doesn't matter? Well, but it would involve the whole of the UK, because these banks have a presence probably in Northern Ireland as well. And if you bail them out here in the UK, it's going to affect Northern Ireland. So maybe you know more than I do, and you want to comment in the description. Maybe this speculation is purely is got nothing behind it, but I think it does. And so how could Boris or the government, or you really at the end of the day, bail out the banks again? Well, like just like they did in '08, they guaranteed hundreds of billions in loans, and then they bought equity participations in the bank. Could they do a bail-in, which means your money would be taken from your deposit? It's possible. It could be a mixture of a bailout and a bail-in. I personally think it would be a bailout. And yeah, if you had money at RBS or NatWest or Lloyd's when you had the banking collapse, your money was safe, of course, because the government bailed these banks out. But what I think will happen if they do that again, it will mean taking on more debt, the government taking even more debt, the Bank of England increasing QE even more to help the government finance all this debt. And all this will mean is that the currency will lose even more value. The value of the currency versus real money, which we know is gold and silver, will decrease even more. So the purchasing power of your money will not be safe. So it could be safe in the bank. I'm not saying you should go out today and take your money out of the banks, but it's a possibility that they could do a bail-in like they did in Cyprus. So people who have over the insured amount, they could lose all that to try to bail out the banks, or to bail them out through bailing in. So bailing in, the difference is that the taxpayer doesn't pay for the bailout. It's the depositors. But in the end of the day, most depositors are taxpayers, right? So that's why I've always said that I'm not comfortable with leaving too much of my savings in the bank. And that's why I've been trying to stack precious metals for the last, well, I've been trying to do it consistently since '02. It's always hard, of course, because you need to have savings to do that. And it's very difficult to save these days for most people, I would say. So, yeah, that's what I think is happening, really, to this Brexit situation. And what about the pound? Yes, the pound has dropped quite a bit in the last couple of days because of the news that we could have a no-deal Brexit. But in the end of the day, I think it doesn't really matter if we have a no deal or a deal. I think the pound and all the other fiat currencies are going lower versus precious metals. The fluctuation of the fiat currencies between themselves, like the pound versus the dollar or the pound versus the euro, that's just noise. In the longer term, they're all going to go lower. We're hearing that the ECB is going to meet this week, and the speculation that the president of the ECB, Lagarde, is going to announce possible stimulus going forward to try to counter the recent strength of the euro, and also the Fed's new policy of actually letting the CPI, or what they call inflation, go above 2%. So that's what's going on. It's a little later today. It's 9:20 a.m. The stock markets have rebounded since I made my video yesterday. The futures, that is, we've got actually the Dow futures up 100 points right now. That's compared to the close from Friday, of course. We got the S&P barely up about 2 points, and we've got the NASDAQ 100 future. That's down 120 points since the close on Friday. So the stock markets, I think they rallied a lot more earlier today and late yesterday, but now they're coming back down a little bit. The precious metals are still consolidating. Some people think gold could go back to 1700. Is that possible? Anything is possible, but even if it goes back to those levels, I think it's going to be really hard to get the real physical metal. So right now we are at 1928.50. That's virtually unchanged from yesterday. The high's been 1936 and the low 1922.54. Silver has traded above 27 this morning. Right now we're at 26.90, up 5 cents. And the currencies, sterling continued to drop here. The pound is at 131.35, down 0.25%. The euro is unchanged, 118.15. The dollar is unchanged versus the yen at 106.25. WTI crude continues to drop here. We're down almost 2% at 38.69. To finish off, let's look at the 10-year yield. It's down just over 1 basis point at 0.71. The 2-year yield is at 0.143, unchanged. So the bond markets are fairly quiet so far this morning. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.